Hey, what's going on, everybody? What's going on? I hope you guys are having a wonderful day. So, I just got back from New York, and today I'm going to talk about two things that I found out about the stock market today. Two things I realized that kind of blew my mind, kind of shocked me. So, we're going to get started. So, get comfortable, buckle up, seatbelt. We're getting started on the Black Financial Channel right now. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins, and I am a finance professor who loves you and wants to see Black people succeed. If you are B1, then I welcome you. If you're not B1, that's okay too. Just don't come in here disrupting the process. B1 means that we are Black first. That means we put our community at the top of our priority list. It means we educate our kids. It means we break generational curses. We do not repeat them. It means that we want our community, our people, to be the most financially literate group of people in the world by the year 2070. That's one that gives us two generations to get it done. If you agree with this philosophy, put a hashtag B and the number one in the chat. Also, take 1 second. Please hit the thumbs up button and let me know which city you're from. Shout out the cities that you're from. So let me just jump right in and talk. First of all, say hello to everybody. And I see Greg West and Mary Jane and Willie and Michael Nelson. And hello to everybody on Instagram. I acknowledge you as well. My Instagram is The Real Boyce Watkins. If you want to follow me on Instagram or the Black Financial Channel, you can follow that on Instagram. My personal page, I get personal, but my on the Black Financial Channel page is all financial. So it's up to you to decide which part is most interesting to you. So I was coming back from New York. I took my family to New York this weekend. We saw Beetlejuice. I had some meetings with millionaires. I sat in a room full of millionaires, and we literally were brainstorming, and it was an amazing experience. I hung out with my brother, ran into a Roe versus Wade rally, which is really interesting. And then something else weird happened. I can't remember what it was. But, I went to the Yale Club. The Yale Club, snooty, mostly white people up in there. I walked in, I saw a big portrait of George Bush, Bill Clinton, and George Bush Sr., and it's pretty fancy. And I had a meeting with a guy, another millionaire, who happened to be a former Yale law professor. So we had a really interesting weekend. So let me tell you some stuff that I figured out and some things that I also read on my way back. So I was thinking about the stock market. I was thinking about you guys and thinking about how you're going to do this week when it comes to your investing, how you're going to make your money, what that's going to look like for you. First thing I'm going to tell you is that it looks like tomorrow is probably not going to be a great day for you. If you're watching this live, which is Sunday, June 26th, you may be watching the recording, but most indicators say that tomorrow is going to be a slowdown. This is to be fully expected because Friday, I mentioned to you guys when we had that big rally that there was probably going to be a pullback, that these rallies are not sustainable. There's a lot of evidence to say that it's going to take a while before we actually fully heal. Now, here's a couple of things that I found out, just that I wanted to share with you. Is I'll share. Do you want the good news first or the bad news? Let me know. Give me what do you want, the good news or the bad news? I got good news and bad news about the stock market. You want the bad news first? All right. Who wants the bad news first? Okay. All right. So Dana says, how do you know these people are actually millionaires? Because they're super famous on the internet, and they have businesses that you can just tell. Like, you can tell when people are really succeeding and when they're pretending. These people are not pretending. They would not have been invited if they were pretending. So it's not, that's not the issue. The issue is just learning from other people. Okay. All right. So here's here's the bad news. It looks like y'all want the bad news first. All right. So Palma and Charles, I'm gonna give you the bad news. The bad news is that stagflation is here. Stagflation is here. Now, I've mentioned to you guys for months what stagflation is, and I'm going to define it again for you for those who might have missed that. Stagflation is the horrible combination of a recession and high inflation. Typically, high inflation comes with an economic boom. What typically happens with the economy in terms of the booms and busts, there's a documentary on Netflix you can feel free to check out called Boom, Bust, Boom. And in this documentary, they explain that typically what happens is the economy takes off and it does really well. Then it overheats and prices start to go up because everybody's doing well and they got money, and the prices of assets start to get bid up. And then they have to increase interest rates and slow the economy down, in order to deal with the inflationary problem. But typically inflation comes with a good economy. Does that make sense? Is that, that kind of makes sense? All right. Well, in this case, stagflation is when you have inflation in a bad economy. So it's almost like going to work and working all day long and not getting a paycheck. Well, most of the time when you go to work, you know that if you work 12 hours, you're going to get paid for 12 hours. The longer you work, the more money you make. Well, imagine if it was the opposite. Imagine if the longer you work, the more money they took, the more money they take, right? Imagine if they took more money from you for working longer hours. That would be terrible. So for some of y'all might know what it feels like, because it might feel like being an entrepreneur sometimes. Sometimes as an entrepreneur, you're working extra hard and not making your money. But I want you to stick with it and keep going and keep learning a new skill, because I do believe entrepreneurship is a pathway to wealth for Black people, especially Black men. I don't think the economy is built for you. I think Black women will always get opportunities that you'll never get. And the world discriminates against you. The world does not like you. And I hate being the bearer of that bad news. But the good news is that you love yourself and I love you, and I want to see you win. So I encourage every Black person, period, but especially Black men, you got to learn how to start a business so you can have a plan B. So that's the bad news. Stagflation is here. Most experts are saying that the inflation is super high and the economy is starting to shrink. So therefore you have stagflation. All right, now for the good news. What's the good news, Dr. Boyce? Everybody ask me for the good news. What's the good news? Put it in the chat. All right. So the good news, okay, all right, there we go. I'll give you the good news. The good news is that I read a study that says basically that, you guys know I'm into studies and research and all that. That's what I'm a professor. That's my background. I was at Syracuse University 13 years and a lot of other universities. So I don't believe in quack science when it comes to financial stuff. I believe that you can learn a lot by looking at history. You can learn a lot by looking at the data. You can learn a lot by looking at data going all the way back before the Great Depression. That's all I did, when I was in graduate school. That's all I did when I was on the faculty of Syracuse. And what I found out was this, that when they looked at every single instance, it was crazy. I couldn't believe it. I still got to confirm it because it just seemed so strange. They said every single time the stock market dropped by more than 15% in the first 6 months, it always rallied in the second 6 months. That the average return during the rally was about 24%. That literally, if you invested if you had a bad first 6 months, which you have, I mean, it's almost July, the first 6 months have been crap. There's never been a time in 120 years or whatever of data, or actually over 100 years of data, where the stock market did not rally in the second half of the year. That blew my mind. I was like, there's no years with that? Are you kidding? Are you serious? No way. And what I'm really thinking is that maybe even when you have a prolonged dip, like even if the market gets body slammed and you're living in the pits, there's still these little bubbles of opportunity that kind of emerge, right? Even during the Great Depression, there were some bull markets during the Great Depression, but you still had an overall depression. So I compare it again, like dating, like being in a bad relationship. Even a bad relationship can have some good days, maybe some good weeks, maybe some good months, but you're still in a bad relationship. The dude's still crap. The woman's still a terrible person, but you have those like pockets where things actually go well. So here's what I'm concluding on this. I'm gonna say this because then I gotta go. I'll be live again a little bit later if you want to go to drboycetv.com because sometimes I play Call of Duty with my friends and we talk about stocks while we do that. My friend GMAC is going to be on there. But let me just say this: I am buying everything I can get my hands on. I am buying the dip. I'm not buying crappy companies. I'm not buying too much crypto. I'm not going in like an idiot. And also a lot of y'all talk about day trading, and day trading is so great. Let me just tell you, most day traders lose money. I've read 1,000 research papers on day trading, and day trading, I know everybody makes it sound like it's great. Everybody makes it sound like, oh yeah, but my formula, blah, blah, blah. They say, you know what I hear? I hear a gambling addict saying that they have a formula to win blackjack. Anybody who understands mathematics, remember I taught math at the University of Kentucky. Anybody who understands mathematics knows that blackjack, you can't control the outcomes of blackjack. You're going to have your good days. You're going to have your bad days. You're going to have some people that win. You're going to have some people that lose. But when you gamble against the house, who usually wins, the gambler or the house? Answer that for me in the chat. Who usually wins when people gamble against the house? The gambler or the house? The house always wins. The house always wins. So just be cautious and thoughtful about that. The only things I know for certain are, one, in this particular environment, long-term buy and hold is a strategy where you almost can't go wrong. Number two, if you're long-term buy and hold and you're buying quality companies that can win. And also, just to give you guys kind of a foreshadow, you guys know we're doing a new Black Wealth Bootcamp starting July 7th, where I'm going to show you another strategy that always wins, and that is selling call options. You've heard people talk all day about buying options. The Wall Street Bets guys, they all love to buy options. And I know why, because they're gambling addicts and they want to gamble. They like the idea of rolling the dice putting up 500, turning it into 3,000. In this market, people like that are getting body slammed. They're losing everything. That's why they're leaving. That's why they're leaving the market, because they're not making that fast money anymore. But the other side of it is selling the call options. I have never been a big buyer of options ever. I have always been a big seller of options because I don't want to be the gambler. I want to be the house. I don't want to speculate on whether or not I might make money. I want the income where I know I made money. And when you sell call options, you sell them just like pairs of shoes, just like selling grapes, or just like selling, selling new dresses. You get your money, right? So that's a strategy a lot of people don't talk about. It's not high risk. You're not rolling the dice. It's for investors who are not greedy, who just want a consistent income, and it works extremely well. And that's how I generate money for my family. My wife hasn't left me yet, so I must be doing something right. So if you'd like to join us, or also we're doing a Q&A Monday night for those of you that are curious and not sure if it's for you or what you're going to learn, you can feel free to go to boycewatkins.com. If you go to boycewatkins.com, there's a link to join us in the Q&A. There's also a link to join the program. We get started July 7th. We meet for 4 weeks. This will probably be the last class I'm going to teach for a long time, because I'm actually doing some other things outside of teaching. I'll still do my podcast and all that, but I really don't do as many classes anymore as I used to, because I'm transitioning certain things. So feel free to go to boycewatkins.com and take a look if that's of interest to you. Or if you're on Instagram, you can just hit the link in the bio, and there's plenty of information up there. All right, guys. So I'm out of here. I hope that you do well, and I hope you make a ton of money. I'll chime back in tomorrow also to talk to you guys about what actually happens in the market. Last time I checked, it looked like the market was going to dip a little bit tomorrow. So you're going to have a little bit of rain in the forecast, but just keep being consistent, and I guarantee you're going to be in good shape. So take care. Love you. Have a good night. I'll see you soon. Bye-bye.